Uh, Let's start understanding the statement of P&L. Chapter 1 of analysis book, when we look at it, we have been used to learning basically the balance sheet format, head, subhead, which you very well know as. But if you see the comparative chapter and otherwise also, it's very important for us to understand the statement of profit and loss also. It has a format, it has heads, subheads, which we need to understand well. The current year sample paper also has a one marker based on the same. Last year's common size question also had a knowledge of this which was required. So let's understand it. So this is how your statement of P&L look like. It's no longer a T format. We start with revenue from operations. We add to that other income the way we have been doing in comparative and common size. We get total revenue. Then we have these list of expenses. We get total expenses. From total revenue, when we minus total expenses, we get the profit before tax. We deduct taxes, whatever is the rate, 50, 30% of profit before tax, and then we will get profit after tax. Here also we can have, this would be current year, previous year. This is how it is presented in our statements. We put it current, previous, first, current, then to calculate absolute and percentage change. Now we need to understand each of these components. These can also be further tested either in comparative or in the other questions based on this chapter. This is how it looks like. They have given the detail of various expenses. Now they have given certain notes here. Let's try to understand the notes. When we are writing revenue from operation, here it is net one because it is sales minus sales return which is done, which gives us net sales. Then we have other income. Other income has various examples under this: profit from sale of asset, any discount received, and there are others also. So that has to be specified. Now comes the next and most important part which was tested this time. Change in inventory. Change in inventory is used basically for opening minus closing inventory of three things: finished goods, work in progress, stock in trade. So we take opening minus closing of these and add that to get our final change in inventories. We can have a list of other expenses also with us. Now let's take up each one by one. Revenue from operation we have already taken. Basically here we take sales minus sales return. The main revenue generating principal, revenue generating activity is discussed here. But we have other income that's not from main business but from other sources. Like you've sold any property, you made profit on that. If your new provision is greater than old one, if any bad debt is recovered, any interest received on investments made, dividend received on investment made by you, provided you are a non-finance company. This is same as what we were doing, if you remember, in our topic relating to mm, your cash flows also. Then we come, these are some examples given. You had to classify them. Like revenue from operation will have sales, whereas, and sale of scrap, whereas cash discount, interest on dividend received, all these would be your other incomes. So in head subhead, this can also be asked. It's not restricted to balance sheet. Then we come to expenses. Under expenses, we can have cost of material consumed. When we have cost of material consumed, in that we will have opening inventory plus purchases minus closing inventory but of raw material. Cost of material consumed, opening inventory of material plus purchase of material minus closing inventory of material. A slight explanation to the same would be like this. Where we have this inventory, let's 1 minute, I'll explain it with the help of example. These are the pages from your Grewal book only. You can go through the same. Uh, inventory can be of finished good and semi-finished, as you were told. Similarly, when we are doing a business, say you are doing your business is you are buying, you are doing a register making business. So in that, uh, material will include the things purchased by you, the papers. Maybe if you're doing paper business, it's a normal inventory. But if you are doing a paper making business, in that it would be a part of your cost of material. Employee benefit basically has your wages, bonus, etc. If it is to factory worker, it would be direct, otherwise it would be indirect expense. Then we have finance cost where give interest on borrowings, etc. Or so these are a part of finance expenses which we have any interest on loan. Then we have depreciation. Depreciation is used for fixed asset. Amortization is used for intangible assets. Then other expenses, the expenses which could not be shown in any of these categories would be classified as this. Now, one special point over here which has been covered in this paper, change in inventory of finished goods, work in progress, stock in trade. The difference in these is we take opening minus closing, not closing minus opening. Opening minus closing we take for these, and we do it for stock of finished goods, work in progress, stock in trade. So when we do that, say this example is given, similar question is there in your MCQ also. There are answer options given as MCQ. Opening 250 finished goods minus closing 2 lakh. So it would give you 50,000. In second one, opening 450 minus 5 lakh would give you minus 50. In stock and trade, 750 minus 7 gives you positive 50. So 2 positive 50, 1 negative 50 gives you an answer of 50,000 rupees. So here in this question which was there in the sample paper, these were given and you had to find out the final answer. There were options given, you had to select it. And what is purchase of stock in trade? Stock in trade means when you're buying something for reselling. Okay, so it depends on the nature whether further processing is required or not. If it is meant for resale, further processing is not required. Here, that same example of register would work, which has been explained to you. So please don't ignore this particular topic. Go through this. A quick reading is sufficient. This will also help you in calculating the income statement when you have for common size or comparative. There also, when these expenses are given, how to use them you would come to know. Clear? So that's it for this topic. Do revise the format of statement of P&L.